Welcome to today's video on another 5 minutes scalping strategy. If you don't know what a scalping is, it means a faster version of day trading. You can make, with this strategy, you can make 5 to even up to 10 trades per day, which I'm going to tell you later on in this video how. And of course, you can even turn $100 to $10,000 in the matter of a month. This strategy consists of 3 indicators and it uses a 50x leverage. Maybe it's too much to your ears, to your eyes, but later on in this video, I'm going to tell you why it's well suited with this leverage and how it's going to work out. So watch the video until then, and if you miss a single part, it won't work. And I have a gift for you somewhere in the video, which is going to be surprising. So let's dive right into it. But before that, if you want to trade crypto on one of the best crypto exchanges platform out there, I highly recommend to check out Bybit. It has one of the lowest fees out there, lots of good features. I talked about it previously, especially if you're a beginner. I highly recommend to watch my tutorial on Bybit, but it doesn't matter if you want to trade on other platforms, it's going to work out for you as well. The link for that video is down in the description. But if you want to take even more benefit out of trading on Bybit, you have a chance of winning up to $30,000 of a mystery box by just signing up into Bybit, and by using my affiliate link down in the description, you have an extra chance of winning an extra $5,000 worth of USDT. So don't miss this chance. All you need is just to sign up, do your KYC procedure, deposit at least 100 USDT and start trading on it. The first thing we're going to need is bringing up the indicators. It's consisting of 3 indicators. The first one, we need 2 EMAs, but let me guess, you're using, even though I am using the free version of TradingView, so due to the free version rules, we only can use up to 3 indicators in the same time. But we need 4 indicators. 2 of them are EMAs, and the rest of them I'm going to tell you. In order to bring up more than 1 EMA on the chart in the same time, we can use this indicator, 10 in 1 different moving averages by Himanshu. You can search it for yourself. I've done it before. I'm going to bring it on the chart. And let's go to the setting. What I do is, you can see you can use lots of EMAs, SMA, different type of moving averages, but I'm going to change the second one also to EMA. Make it activated, change the duration of the first one to 50 and the second one to 200. And the color, the thickness is up to you. I'm going to do it my way. You can do it any other way that you like. And then I'm going to go to style and change the thickness of the second one to make it more visible to my eyes. Next, we need MACD, which is moving average, convergence, divergence. If you don't know anything about these indicators, don't worry. I've made completely dedicated videos about each and every one of them. About moving averages, one complete dedicated video about MACD, RSI, all of the fundamental basic indicators, which I'm going to leave the link down in the description, and go check them out too if you don't know how they work or you're not familiar with the concept. So let's bring the MACD on the chart and go to the setting. We don't need the signal on MACD line, and let's go to inputs, and I'm going to scroll down, change the chart time frame to 1 minute. I am on 5-minute BTC to USDT, but I'm going to change the MACD setting to 1 minute. And the last indicator we need is RSI, Relative Strength Index, and you can just leave it to the default setting, or you can change it the way I do. I like to remove everything about the middle band because it's the same as moving averages. I don't need them. I want to make it red and make it more thick and bring it right away on the chart, just like that. So it's really simple. If you're familiar with the moving averages, again, you know what I'm talking about. If you're not, you have to check my videos about these 3 different moving averages. So the checklist is really easy. How we should enter a trade. So we're going to use the EMAs as a trend indication. If the price is above it, we consider it as an uptrend, and if the price is below it, we consider it as a downtrend. And we wait for the golden crosses, which means the shorter EMA, which in this case is the 50 EMA, crosses up the higher EMA, which is 200 EMA in this case, and we call it the golden cross, and vice versa, we call it the death cross, and it's going to indicate that the trend is about to reverse and go for a downtrend. And let's make some examples how this exactly works. And I really like this strategy because it gives you lots of signals, lots of entry points. It's crazy good. I really like it. Let's see how it works. Let's say I'm looking for a long trade. First of all, again, if the price is above it, I'm only above the 2 moving averages. I'm only looking for long trades. And then I have to wait for a golden cross, which happened here. So the shorter moving average is going to cross the longer one, or let's say the faster EMA is going to cross up the slower EMA. And then I'm waiting for a pullback of the price. So after the cross, the pullback was here. Then I'm going to check down the MACD, and I must see downtick. In this case, is going to be here, this one. a downtick in red. Maybe it is against the common belief that you have about the MACD that for a long trade I must look for a green one, but in this case here you must look for a red one. Also, although if it makes you confused, you can just you used to the colors. So green is for long, red is for short. You can just go to the setting and change the colors for yourself. But here, this is how I tell you. You can do it either way. Then when I see this one here, so it was the golden cross. The price had a pullback, and then I check it down below, and I can see this red tick here. Now I'm going to enter the trade, the long trade, here on the close of this candle, of this red candle. I'm going to enter the trade, and where should my stop loss be? Alright, my stop loss is going to be 0.4, just at this point, and my TP is going to be 0.5, and it makes my risk to reward ratio, it sits somewhere around 1 to 25, yeah, 1 to 25, so it was a successful trade, one here, then I wait for another pullback, which was here, this one. So I check down below, I see the red tick, I see this one, I take another long trade here by the close of this red candle. I put my stop loss 0.4 here and set my TP 0.5 and another successful trade. As you can see, this is the reason that we're using high leverage. One of the reasons is this, because our profits are so small and we want to make the most out of the market. So 2 successful trades just right after each other in matter of, so it was 5, and I mean in a matter of hours. And one of them took like 50 minutes. Another one was 7:20 and it took up to 8:05. It was another, let's say 45 minutes, 50 minutes. So in less than 2 hours, we made like 0.5% here, 0.5% here, 1% totally, but with the 50x leverage to 50% is crazy good. So, do I take a short trade here? No. Yes, I have the price below both EMAs, but there are several reasons why which I shouldn't take this trade. First, I do not have a death cross. It means the faster EMA crossing down the slower EMA. Second, I do not see the opposite tick. So for a long trade, I was looking for red ticks. Here, I must look for green ticks. So it was not a green tick here. So I cannot go long either short because it's not following up my rules. Then I wait for the price to go again above it, above both moving averages, pull back here. And then at a certain point, I can go for a long trade if I have a red tick here, which I have, yeah, and I take a long trade at the close of this candle, and then I put my stop loss 0.4 here, and yeah, take the profit of 0.5 here. So here's a rule of thumb: after a cross happens, after a golden cross or a death cross in terms of short trades, after the cross happens and you take 3 trades, stop trading. Although you can see good trades, but because it's already too risky, you're using high leverage. After 3 trades is enough. You will have enough time and enough trades in a couple of hours. Maybe go out, do whatever you want to do, go to the gym. If this is your second job, go do your first job, do whatever you want to, go away from the chart and then come back and take other trades. So let's make an example for a short trade. So I had a death cross here at this point and I wait for a pullback, which was here. I take a look at down here and I must look for a green tick, which I can't see. It must be a strong green tick like this one. So a second pullback, green candle, green tick here. This one is better, and I'm gonna take a short trade at this point, put my stop loss 0.4 above it, and then I'm gonna put my TP 0.5 below it like that, and it was a successful trade. And then I wait for another indication. So it's the right time and a good time to talk about the RSI. And maybe you ask yourself, why do I use RSI? Why did I bring it on the chart? In this point, as you can see here at this area, let me mark it just like that. In this area, we are already in the oversold zone. So you can see even a divergence in the RSI. And another reason is that we know, due to the rules of EMAs, and that the higher time frame the EMA is, like the 200 here, it means more accurate it is, and it works like a magnet. So when the price is going farther from it, it tries to bring the price back to itself and then reject it again. So as you can see, you shouldn't, although if you wanted to take a trade here, it was successful. But again, because we are using high leverages, it's going to be more tricky, and I won't do that myself. Then we can go for another trade. I wait for a pullback. Yeah, it was a pullback here. Should I enter a trade here, or should I not? Mostly I wait for the candle to be at or below the 50 EMA, and in the case of long trades, at or above 50 EMA. So in this case, I'm going to eliminate the false signals. So next step is knowing potential and right leverage of the system. We can bring up this website, winrate.io, which simulates your profits from crypto trading. Let's put it here. In the beginning of the video, I told you you can turn $100 into 10K in a month, and it's possible if you follow up everything correctly. Let's see if it works or not. Okay, here is $100, and the minimum winning ratio of this system, which is tested during hundreds and hundreds of trading, is 66%, which is really good and it's really high. And then the take profit, I told you our target point was 0.5 and our stop loss was at 0.4. And the number of trades which you can make, as I told you, at least 5 trades a day, and it average, so it makes 150 trades per month. And then the leverage is 50x, and we leave the rest to its own, and we're going to run the strategy. And you can see it's almost close to 10K with everything told to you. And it is an average. You must be really, really careful with your position sizing, which I'm going to talk about later on in this video, with your risk management system. But here, as you can see, out of 150 trades, 99 of them is going to be wins, 51 is going to be losses. You're going to make totally 36K. Which 16K is going to be losses, and you're going to pay 9K for fees, and then your net profit is going to be almost 9K. You can make it up to 10K. So it's an average. It's not accurate that much. Although if you want to make less risk, you can use half-time leverage, 25x leverage, but it's going to bring you up to almost 2K, which is still really crazy good. But it's up to you and your choice. You can choose whatever you want to do. So next is choosing the right exchange. Where to trade, what is the best choice? Before telling you about my choice and what do I use, we must look for an exchange which is with super low fees. Why super low fees? Because we are taking lots of trades, and already our take profits here, as you can see, 0.5 and 0.4 are too low. So if I choose another exchange, like let's say like Bitfinex. So if I choose Bitfinex, it's going to be like 0.1 for the limit order, which is crazy high. So if I'm gonna hit the target, it's gonna be minus 0.5, so it's gonna be 0.4, which I don't want that. But if I choose something else like Bybit, you can see even I'm gonna make some money because it's minus 0.025% per trade, which is crazy. But you're gonna even make some money over that. So if I change again to Bitfinex and I run the strategy, you can see you're going to be totally wiped out after a couple of trades. And it leaves you nothing. So choosing the right exchange is crucial. I'm using Bybit. I really like it. The graphics is really good. You know, everything is crazy good. I'm going to leave the link down in the description. You can just, if you're not on Bybit, trading on Bybit, you can use my affiliate link and help me out, give me some bonuses. And just go through the link and sign up, do your verification process, and then enjoy trading vast number of pairs, coins, and lots of other good stuff in there, which I am myself really enjoying. I even love it more than Binance, and I'm going to tell you why later on. So the next step is executing the trades correctly. What I do is that I'm only having my chart above like TradingView, and I have my exchange application on my cell phone device ready to take a trade. But you can either do it with website platform and split your monitor. If you're using 2 monitors, it's up to you. You can have one page open with your exchange open, one with the trading view, or you can only open your exchange and check the chart there. It's up to you. There are lots of ways, but you must be ready. And next thing which I want to talk about is what I do is to set my entry points always market, because I'm waiting for a candle close with the criteria as I told you before, and then the exit point with the limit order. So the entry is on market and the take profit is on limits, and this is all about it. Keep it in mind, we're making the exit with limit order because the fee is a lot lower, and of course the market is going to be there, and you're going to take the profit and benefit of being a maker than a taker. If you don't know what this stuff is, I'm going to talk about those later on in the other videos. But if you want to exit the market like market order, there are some cons to it. First, maybe the market is going to move in your favor or in the opposite way, and it's going to be a sharp movement, and by the time you're going to be closing your order, is going to go really crazy up and down, and it can even ruin your trade. So I do not recommend that at all. Also, what you need to do is to check the order book here. Your position size shouldn't be more than the orders in the order book. Why? Because you need it to be filled. If you're growing your account and your account is already more than 15K, $15,000, or let's say 15,000 USDT, just keep your position sizing in somewhere in between 10 to 15K. Because more than that, there is a chance, as you can see here in the order book, you can see, for example, it's 40 78 Bitcoins, it is all right now, but it is not always like that, especially when market is in indecision or on the weekends. So be careful with that. Keep it in mind, if you want to trade, only wait for candle closes. So do not tell yourself, okay, it looks like the candle that I want. I call it always this way. We'll look at the market the way it is, not the way you like it to be. It is crucial. If you want to fight the market and start to see the market with your own eye and see, okay, it's going to be going in my favor and it's beautiful, believe me, it's going to be as ugly as a nightmare. Last but not least is about the pairs and the coins. Maybe you tell yourself, okay, I have a watch list already and I can trade on other assets, for example, like Gala, which everyone knows is going like crazy good in terms of volatility, and the percentages of the profits are really high. But the problem is with the market cap and the volume of that specific pair available in your trading exchange, which I do not recommend at all. If you want this system to work out for you, only trade on Bitcoins like Bitcoin or at last Ethereum. These two, just pick these two. Go do your research, do your backtesting, and you're going to realize what I'm telling you. Another thing which I want to mention is that you have two options. First, you can bring up your exchange and bring up everything here, because we are not using any indicators, crazy indicators, which are not available as standard indicators. You can use the chart here. So the benefit is that you have everything in front of you. You have your order book here, you have your order panel here, and you have your chart here. But if you want to use TradingView, in that case, you must make sure that the feed that you're getting from your chart is coming from your exchange, because sometimes the market cap in between the exchanges, they're changing rapidly and they are not the same. For example, the market cap of Bitcoin and the volume available on Binance exchange is way more different than Bybit. So you must, and it affects the candles and the chart readability too. Especially in lower time frames. In higher time frames, it's not noticeable at all. But in lower time frames, especially 5 minutes time frame, which we're dealing with for scalping, it's gonna be different. Believe me. So the chart you need is the chart BTC USDT perpetual contract from Bybit. If you're gonna use Bybit, if you want to use OKX, Bitget, or any other exchange, that's up to you. But choose the chart which is connected and the feed is coming from your own exchange. That's mandatory. Do not come to me later on and say, oh, it's giving me false signals. It's not false signals. It's you doing it wrong. Next thing which can make your trades really good and really effective is to make your trades, no matter what kind of trading strategy you're using, is that although again I want to tell you, the trend is your friend, so you can find the main trend in the higher time frame. So the best higher time frame for 5 minutes time frame is 1 hour. So if you switch to 1 hour time frame, you can realize that the price is, let me tell you what I mean. So the long trades we made examples were here, and this is 1 hour time frame. In this case, when you check it out, you see, okay, it is after golden cross even in the higher time frame, and we are pretty confident that the market is in an uptrend. And the next thing which you want to check is that in the higher time frame also, the price is not like this one here, is in the overbought or oversold territory. Then you can decide more confident that, all right, I can take long trades. So here's the rule of thumb. If in the higher time frame, the market is in a strong and confident uptrend, like in here, in this case here, do not go for so many short trades that much in the lower time frame. As you can see, if I switch back and I bring the same part, which was here, as you can see, the market was still going up. See, it didn't give us so many short trades, maybe one here, another one here, and maybe one here. And it was not right after each other. But when a market is starting this uptrend or even a downtrend, and it's in the beginning of the, just right after the cross, you can see the trades and opportunities comes to you right after each other, back to back. So here's my gift, which I wanted to tell you. My gift to you is my free course of how to become a trader with everything you're gonna need. So if you're new to trading and you feel busy-minded with lots of data and you don't know where to start, or even if you're already trading and you don't know what you're doing, I highly recommend to watch my videos and start from the scratch. It won't take your time that much. I did my best to keep them as short as possible, as efficient as possible. So I'm going to leave the links both above here and down in the description. So did you like this video? If you really like it, please share it with your friends. Subscribe to my channel if you haven't yet. And by turning on the notification bell, you're going to be the first to be informed when I'm going to upload a new video, which I'm doing on a daily basis. And please just let me know down in the comments, what do you think about this trading strategy? Do you think it's going to work out or not? Or have you tried it before? Or if you're doing your backtesting, just let me know what you think. I really appreciate it.